Hello everybody and welcome to the weekend update for Sunday, October 2nd. So everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. Alright, we got that out of the way. You know what to do next. Go smash that like button. Did you do it? Can I move on now? Okay, cool. All right, let's take a look at what we got for earnings, which is not very much at all. There is almost nothing here until Thursday before the open. Constellation Brands is kind of closely watched. Might be interesting for some of you. They are a big company, and Conagra could give us insight in how the agricultural industry is doing in North America and around the world, really. They're a huge multinational company. Not sure if people are interested in Levi's or not. I think probably not. On Friday, I know there will be people interested in Tilray, although I'm not sure why anybody is still interested in pot stocks. Probably the most consistent downtrend ever seen in the stock market is this industry. But people who are into the pot stocks keep telling us a bottom is coming there. Have yet to see that happen though. Okay, so that is it for earnings. As far as macroeconomic events goes, on Monday, tomorrow, we have ISM manufacturing PMI. This is important. This is another one of the inflation measures, and sort of gives us a look at how things look. Inflation looks from inside industry, and in this case, manufacturing industry. There's also lots of Fed speak, lots of Fed heads speaking all week long. On Tuesday, we have the JOLTS job openings, and this sort of opens up a week of important jobs reports. So on Tuesday, we open that with JOLTS job openings. This could very well be a market-moving event. On Wednesday, we've got OPEC meetings. So anybody who's watching energy is going to be watching this closely. We expect to see a cut in production from OPEC. There have been talks of 1 million barrels a day. That seems a little much, but I think it would be a surprise if they don't cut production at this week's meetings. We also have on Wednesday is ADP non-farm employment change, and we have the ISM services PMI. So lots of important stuff on Wednesday. On Thursday, as always, we have unemployment claims, and then on Friday, the big one for the whole week is non-farm payrolls. So this gives us the unemployment rate. It tells us how much, what are the total payrolls going out into the economy. And this is something that the Fed watches closely. As you probably know, I don't think they're going to consider inflation beat until we start seeing unemployment rise. So this could be our first look at that. And, this could be a huge market-moving catalyst. If this comes in a little weak, that could really spur a rally in the market. And because in this case, it's sort of what's bad for the economy is going to be good for the stock market. So that's our big reports this week. We'll take a look at the major indices. And some important commodities, any sectors, and see if there's any setups. Before we do that, couple of important news items that we'll be watching really closely to play out tomorrow or over the next couple of days. And the first one is China has warned their banks that there'll be a huge U.S. dollar dump coming. So China will be dumping the U.S. dollar and buying yuan to try and prop up their currency. I'm not sure how that sort of event will affect the markets. It certainly will affect currency markets. But normally when we see the U.S. dollar index go down, we see equities go up. But this one here seems a little bit artificial. So it'll be interesting. I'll be watching that closely. Be interesting to see how that affects not only the U.S. dollar index, but also North American equities. And the second one we're watching is Credit Suisse. And actually, let's bring up a chart on that. There's a lot of this is the financials ETF that we want to look at Credit Suisse. There's a lot of talk that Credit Suisse is on the edge of insolvency or bankruptcy. I think that sounds a little bit harsh, but it has been getting a lot of play. Their bonds were recently downgraded. You can see that. I believe that happened right here on this day. They've had a bit of a plunge. They're trying to find a bottom here. And they sent out on Friday, they sent out a note trying to reassure their clients that everything is fine. Everything is probably not fine with this company, but as far as them going bankrupt and causing some sort of financial collapse or throughout the entire system a la 2008, I think that's going a little far. And people have a bit of a bias to when they're looking for the next major crisis in the markets. They always look at the last one, and the last, aside from COVID, obviously, the last major crisis was 2008, and the financial crisis. And people are always looking for that to kind of repeat. And that's not what the next crisis is going to be. The next crisis is going to be something that we don't see coming, or not many of us see coming. It's not going to be the same thing that happened, 14 years ago. So, I don't think Credit Suisse here is the end of the world. However, if they did have some sort of insolvency or bankruptcy type event, the knee-jerk reaction is going to be to sell everything, especially all financial stocks. But it'll reverberate through the markets. We will have a big down day, throughout the markets. But I don't think it would last long. I think that very quickly people will realize that other banks don't have a lot of exposure to this bank. This bank has had problems for a really long time. I mean, look at this. We're going back to, when was there? Here we are. 2007, April of 2007 is when they put in their high. Obviously, they had a lot of trouble during the financial crisis, but they never fully recovered, and they have been in a solid downtrend ever since. And now that trend is accelerating. So, it's not a surprise if this company, this bank, eventually goes bankrupt. I don't think they're going to, but I don't think other banks, other investment banks have a lot of, and investors don't have a lot of exposure to this company. Why would you? This thing is a disaster. So, I don't think this is what causes, the big crash of 2022 or the big collapse of 2022 or whatever it is that you want to call it. I don't think that's happening here. Short term, there could be some pain, and maybe this triggers the capitulation event that many of us expect to see in the markets that would put an end to this bear. That's a possibility. I see any kind of big move down, any kind of capitulation caused by Credit Suisse here. I think that is actually, we should see that as an opportunity. Not a reason to sell out of everything, not a reason to expect a massive crash. All right, so that is some of the current events that have come up over the weekend. Let's take a look at the S&P 500. So we are looking at the SPY ETF, and you can see I have had to wind back into late of 2020 to find our next levels of support, because we have now broken down through that 362 level, that June low, and closed well below it. Where did we close? In around 357. I see our next minor support at around 352, and the next level below that in around 342. Now, you know, we closed on the lows on Friday. This candle here looks really weak. I don't know, intraday it didn't feel that weak to me. It didn't feel panicky, although we did have a lot of volume. But there's, you know, something really interesting here. I want to point out, it's down here in the RSI, we have a hint of bullish divergence. Okay, so you can see the RSI bottomed out with the close on February 27th, okay, when the market closed here. And this was the lowest close since June. And it closed lower than that the June close. And you know, we have this one up day, and we've moved back down again, and we've had this, you know, apparently really weak day on Friday. The RSI did not make a lower low, which is quite interesting. Now it's, you know, you can barely see this here. It's very subtle, and it's, you know, I'm not going to run out and buy things just because of this one signal. But it does kind of make me wonder that maybe we are getting very close to a bottom. Another thing that that has worked really well is you can see this orange line here that I've put on the volume of the SPY. And when SPY is in a trend and volume spikes above this red line, this orange line here, we often see in reversal fairly quickly afterwards. So that's something I'll be watching for as well. That had been working really well for quite a while. If you want to check this out for yourself, just put your volume line in around 125 million shares or so, and just go back and look at the chart and look and see how there were often reversals when volume spiked up like that. So we've seen that again. I mean, and again, this is not another, you know, this is no sure thing by any stretch of the imagination, but it does say, hey, you know, maybe you should be watching for a reversal here. Keep a close eye out. So let's take a look intraday. You know, part of the problem with, here, I'll go to a 5-minute chart here. You know, we had a really weak close on Friday, and you know, we were pretty much, you know, we bounced up a little bit, but you know, couldn't even get up to the pre-market highs, and then we you know, we just ground down all day long, and then very weak into the close. This weakness into the close shouldn't be surprising considering it's month end, it's quarter end, and we've had nothing but bad news. And you know, the Credit Suisse news was coming out by late in the day on Friday as well. So who wants to hold over this weekend, right? No wonder they're selling into the close. So I wouldn't put, you know, I wouldn't worry too much about this. Even this whole move down on Friday, you know, not at all surprising to see, you know, a big down day on Friday. And you know, that has been kind of the way this whole year has been. Fridays have not been good, month ends have not been good, certainly quarter ends have not been good. But Mondays have been good, and the first day of the months have usually been good. First day or two, right? So, you know, maybe if some of this bad news sort of plays out a little bit on Monday, then maybe we see a nice reversal on Tuesday. So again, I'm trying not to be too concerned, I'm trying not to be too bearish, and I'm actually thinking that, you know, we need to keep our eyes open for an opportunity here. We could be getting closer and closer to some sort of capitulation flush. Okay, the NASDAQ, it closed below the June low. Not on as high as volume as the S&P 500, as the SPY, but still below that level. We've got another support in around the 262 level on that, and some more support coming in. No, I haven't drawn any other support in there yet, because I don't think we're going much lower here. IWM. So the Russell 2000 small caps have not closed below the June low yet. they're consolidating fairly nicely, building a base in there, and holding above that low. So that is actually nice to see, and that is another hint of a bullish sign here. That we haven't broken down yet, because the Russell small caps are more of a risk on type of index, right? Okay, let's keep moving on. Volatility index, seeing some mixed signals here as well, right? We had a big move down on Friday, but the volatility index pulled back a little bit. It's interesting. We had that big spike up on, when was that, Wednesday, and that pulled back. We gapped up a little bit. You would think with the SPY and the Qs making these new lows, breaking below this important support here and closing below that important support, you would think that volatility would be up, up above 35, 36 in that area. It's not. That's interesting. That's a bit of a divergence. Another thing to keep an eye on. The 10-year yield. So that, we pulled back a little bit. We've come back into the trend line after getting stretched away from it, and we bounced on Friday. So we'll be keeping a close eye on this, especially with everything going on in the currency markets as well. This could be a really good clue on Monday morning where we go. Let's take a look at the dollar index. That is obviously going to be quite important for Monday morning, with all this this news of China going to be dumping their dollar. So it'd be interesting to see if they do actually do it, if the dollar comes down tomorrow or even tonight when currency markets open up later today. How far down do we come? Do we come down to this much more reasonable uptrend line? Or do we find support at the 21-day moving average here? Tough to say, but I think it's a fairly safe bet we come down. But I'm no currency expert. I just I watch currencies more for their relation to equities indices. Okay. Let's look at the DCA timing really quick. All three indices are in the switch off mode. We will not be doing any dollar cost averaging on our index trades in either the S&P 500, the QQQ, or the IWM. And you can see that all three of these have a fair ways to go before they get turned back on, right? We've got to see this blue MACD line cross back up above the signal line. It's most dramatic in the SPY, of course. You can see that this MACD line has turned down quite sharply here. So we're going to need a couple of weeks for this to reverse and turn back up. And we're also going to need to see this move back above the 20-week moving average here before this system goes green again. Okay, let's move over to some of our commodities. We'll start with gold. Interesting little move in gold here over the last few days. So you can see that gold, is broken down below this important support area. In around 1680, broke down and has turned back up. Came back up into this 1680, which is now acting as resistance. We've got the 21-day moving average overhead. We've got this resistance here. We've got a little bit of a gravestone doji, shooting star, whatever you want to call it. So this looks ready to roll over again. It looks like this is a failure at resistance, and we can expect to see more downside here. If it can save itself, though, I think we could see a strong move out of gold. If it can save itself, it's going to catch a lot of people off guard if it does. The gold miners, similar kind of price action. It stalled out right at resistance and pulled back a little bit. But it has made a pretty strong move over the last week. Silver, not a lot. We were expecting to see more strength out of silver, and it's just not really materializing. Copper. So copper has also had, a good couple of days, moved back up into resistance, moved back up into this former uptrend line, and seems to be stalling out. We've got a doji here, indecisive little candle, right under resistance and under that declining 21-day moving average. So it doesn't look good for copper. And with copper declining, that's generally not good for the economy either. But again, what's not good for the economy might be good for the stock market. Commodities. So DBC, the General Commodities Index, and you can see week before last we gapped down through support, and now that support is becoming resistance. You can see that we kind of moved into the gap a little bit, but we stalled out right at this resistance and have started to roll over. The agricultural commodities ETF. You can see, this had a nice uptrend going, but it started putting in some topping action up in here. We talked about this, right? That's actually a really nice looking triple top now. Had a move down, and it's drawing a bear flag. You can see we expect that to break to the downside. The measurement actually comes out pretty close to this pivot low, that July low. So interesting to see how this plays out. The volume pattern matches a little bit. Not ideal. We'll see a number of bear flags today, and a lot of them have a weird volume pattern, so perhaps not quite so trustworthy. Okay, let's look at oil. So oil is still firmly in this downtrend channel, and it's not even on this latest move up, which was really only 2 days long. Couldn't even get up to the top of the channel or that 21-day moving average just overhead there, and started to roll over. But we do have three nice little lows right here that if we come back down to them, we should probably expect those to support. Let's see. Let's move on to natural gas. So natural gas. We've got a bear flag here, and again, this is another one with a weird volume pattern, because what we expect to see, when we're making a bear flag, we expect to see high volume in the downtrend, okay, and we kind of had that, except later in the downtrend, our volume started to fall off, which is odd. And then we expect to see low volume as we consolidate. And we have that a little bit, but the volume is like spiked right up, still inside this consolidation. So I'm not sure what to make of it. All of this, and we've got support here. We've got a support resistance line below us. We've got the 200-day moving average, which just bounced off of this week. So this is starting to look a little bottomy to me, rather than being a bear flag. I wouldn't be surprised to see this break to the upside. And if everybody's expecting this to break to the downside, and especially if it does break a little bit and everybody hops on board and then turns around and goes back up, that could be a really strong, fast move. It'll probably need some sort of macro global catalyst to make that happen. Not sure what that would be. But yeah, keep an eye on this, because this could go really fast and catch a lot of people off guard. XLE, the energy ETF. This, again, sort of a bit of a bear flag here as well. This one does have declining volume in the flag like you would expect. But it's also a nice little uptrend. It's really clean here with resistance right overhead. Again, this is the sort of thing that could really catch people off guard, I think, if it broke out to the upside of this. Because I think people would expect this to break out to the downside. XOP, the oil exploration and production. Similar thing going on here. This one's a bit of a wedge, though, and we do expect to see that break out to the downside. So have to see, keep a close eye on that. So you can see, you're seeing a pattern here, right? Is it looks like these. It looks like this space is setting up for something. And that something, remember, might be coming on Wednesday when we have the OPEC meetings. So it seems like everything, the macro seems to all sort of be coming together with the TA here, with our chart patterns, and setting up for a big move on resolution. The oil services ETF. Again, similar sort of pattern, right? Nice little short-term uptrend squeezing into, the bottom of this gap, looking really ready to make a move one way or the other here. TAN, the solar ETF. This, as it broke down from its gap, put in another gap, almost closed that one, continued to move down. Can't seem to get back up to that or through that former downtrend line. Seems to be acting as resistance again. Yeah, we'll see what happens. This might be just being indecisive with the rest of the energy complex. For solar, look at a couple of the the strong performers in this space, and you can see it's hanging in here near the highs. A little bit volatile, but still hanging in. So that's good to see. This hasn't completely rolled over yet. That's important. ENPH is another one hanging out near the highs, building another base here right above support, right where it should. Will we see a break out of this and move up and then consolidate again up in here, getting ready for another breakout? So keeping an eye on that as well. All right, let's move on to some of our other sectors. We'll start with consumer discretionary. This is not looking good. You can see this broke down. This had put in, a few lows here, and that broke down out of there on Friday, and looks like this, will probably continue lower. XLI, the industrials ETF. This one is kind of interesting. Now you can see here we've got this gap going all the way back into late 2020. And I've kind of had to go back into even, kind of 2019 to find the next level of support. It's like 2019 and the pre-COVID area, and then the post-COVID, recovery rally. That's where I've come up with this $80 area support. But you can see we are well into now this gap that goes back to late 2020. Let's zoom back into our current price action. And you can see, though, this, what some people might call a bear flag, is sloping downwards. So that's not usually the way we see flags slope. Flags should slope in the opposite direction of the trend that leads into them. So when that happens, this is a sign to beware or to expect failure. And failure in this case would be a break to the upside. So that would be interesting to see in our industrials. Who knows? If this did break to the upside and had a strong move up, maybe this could be one of the leading sectors in a move off the lows. Right now, it is one of the weaker sectors, so I'm being very speculative on that. This is sometimes how a rotation starts. Sometimes one of the weakest sectors will see rotation into it. And you can also see there's just a hint of an RSI divergence in here as well. Because we've had a new low close put in on Friday, but we have not put in a new low on the RSI. So yeah, worth watching this industrial sector, I think. Financials, just barely hanging on here, hanging on to this July low, barely, looking like it wants to break down. One of the financial stocks that we have been watching is Schwab, and this one is still hanging on. This 50-day moving average is still supporting nicely. No real setup in here. I mean, maybe this, maybe this 3-day consolidation is a setup. You could take, a break on the high out of these two highs. A break above these two highs might be a place to buy. It's not financial advice. And a stop and go below the 50-day moving average or the low of Friday. These things don't move fast enough for me. The beta's not high enough for me to really get excited about. If you're looking to invest, you can do worse than Schwab, I think. XLK, the technology ETF, broke down, continues to break down. Accelerated on Friday, closed on the lows, not looking good there. But coming into some gaps that we've had to go way back into 2020 to find areas of support, and that support could be these gaps. We have an unfilled gap, or partially filled gap from as our first one, and then we've got a larger unfilled gap below that, and then we've got what should be a fairly strong support. Actually, I'm going to change this here because this should be this should be a fairly major support level in around 110. So, if technology continues to break down, it kind of looks like it will. And again, maybe this is all setting up for a capitulation here down to, maybe find support at the bottom of this gap. That's around 113, or maybe comes all the way down to 110 if it's a serious capitulation event. And that might be it, because this looks like fairly major support here. The communications ETF, another one where we're seeing a little tiny hint of an RSI divergence. You can see that we put in a slightly lower close on Friday than this close here, but the RSI is higher. Again, it's just a divergence. It's one piece of the puzzle. But there it is for what it's worth. I do like those RSI divergences, though. Again, going back into, well, here, I mean, look at, we're having to go back early in the COVID recovery rally to find our next levels of support and resistance. So watch out if we break down out of these lows that it put in last week. We're probably looking at 45 as the next area of support in the communications sector. But so far holding here, a bounce from here could do really well for the market on Monday. All right, let's look at some of the FAANG stocks, or our big tech stocks. This is Meta. Ugliness, but it's trying to find support in here, and right at our COVID lows. It's not looking ideal. It's a little bit of a bear flag. However, you heard me talking about how the volume pattern is weird on a lot of these stocks, right? See how we've kind of got declining volume on this move down, big move down too, right? That's actually not quite realistic there. That looks a little better. Declining volume on the way down, and then we've got sort of almost, kind of rising volume through what should be a consolidation. So that, suggests to me this is a weird volume pattern in here. It's a bit of a divergence. We should sort of keep our eyes open here and maybe be wary of any further break to the downside. Apple. So Apple was the cause of a lot of our troubles this week. And what's interesting is when Apple was being so strong in here, I remember a lot of people saying that this bear market can't be over until Apple goes and pukes. And it kind of feels now like Apple is puking. And it certainly feels like, you know, Monday is going to be another down day for Apple. You know, that's how it feels. They're really selling it. You can see we've got high volume in here on these red candles. So there was this green candle that had really high volume, but that, you know, that should have supported. That should have been a reversal candle, and it completely failed, which suggests to me that we are going to, no matter what the market is doing, we're going to see more downside in Apple. But it's also hard to see the market going up if Apple is falling apart. And which is sort of my thesis for Monday, is Apple, you know, falls apart. Now, I wanted to show you something here with the 50-day moving average, which is in green. I want to look at this sort of capitulation event that we had back in May in Apple. And I want us to look and see how far do we get stretched from that 50-day moving average. And we stretched away about 18% before we had a bounce and a nice little rally. Now, we did roll over again and move down a bit more, but you know, it did get really stretched, like it's getting really stretched now. Now, on the way back up, you know, when we had this rally, how far did it stretch away from the 50-day moving average to the upside? About 17%. Okay, we're seeing a little bit of consistency here. So let's say, well, how far are we? How far are we right now from the 50-day moving average? So right now we're about almost 14% away from the 50-day moving average. It would not be unreasonable to suggest on another down day that we could go down another 4% a day. 4.5% in a day, and put us sort of right on target at that 18% area, which is right above the June low. It does seem to be setting up for sort of a capitulation that, you know, comes in here, some panic selling, and then a bounce. So perhaps we get that panic on Monday, and then Tuesday, you know, we get the bounce. It's just one way of looking at this. I'm not saying this is what is going to happen. It's you know, it's just a thesis, just some thoughts that are going through my head. But it does look like there's more downside in Apple. Amazon. So again, Amazon. You know, we've got this. We pointed this out in the ticker talk on Wednesday. This bear flag, but again, the volume pattern is just not right. This is weird. It's very, very consistent volume, but it does look like it's breaking down out of that bear flag, and that takes it down to go test these lows, these, you know, June and July lows, if that does break down out of there. Netflix still happily chopping around in this range, probably chopping people up too in here. I'm sure that if you're, you know, if you're in this already, waiting for this breakout that we've been waiting for ages now, you must be feeling really chopped up in here. Just can't seem to get through that, you know, or get through the 250 area and hold. And it's just not breaking down either. So anyway, this is still something, you know, worth a watch, but man, it's gonna, even if this does break out, it's gonna be hard to buy. Google, another one that is just, you know, sort of continuing to break down and put in new lows. You can see now we've closed this gap. I think this gap goes back to 2020 as well. Oh, this one is early, yeah, beginning of February 21. It's where this gap comes from. We're right at the bottom of that gap now. If we don't find support there, and we should, right? You expect it to find support at the bottom of these gaps. If it doesn't, though, next place you're going to want to look is in around 91. Now, I've seen some people talking about how they want to buy Google, or they will be backing up the truck. Is one of the phrases I saw. If this comes down to 90. If you're one of those people watching this for a move down to 90, I think you should also be watching around 91. because we have seen 91 act as support, and I think that people might front run that 90. So if you see it come into the 91 area and then start to turn or bounce, you might not get your 90, and you might want to consider going in a little early on that. Conversely, if that does break through, the next level of support, and this should be a fairly strong level of support, should be around 85. If we have a serious capitulation event, early next week, 85 might be the level that this ends up at. I'm going to make that a major. There we go. Okay. Microsoft, another one of the messy ones, I think, if I remember correctly. Broke down through support, continues to move down. But again, look at hints of RSI divergence, right? Making new lows. Let's just zoom in a little bit here. Making, new closing lows, but not making new lows on that RSI. So the tiniest little bit of divergence in there. We've got some support in around 228. That's going back into early 2021 and late 2020 to find those support levels. Tesla. So Tesla had their AI day on Friday night. So it'll be interesting to see what happens there. I haven't actually seen a whole lot of chatter about the event and what people think about it. So, we've got a bit of an important support level here and another important support level just below. Do people like what they saw? Does that make them want to buy this stock? If so, yeah, we're going to bounce here, right? If not, how far down do we come? So yeah, obviously Tesla is one to watch, even in the pre-market, tomorrow morning. I think this could be a market-moving event on Tesla tomorrow morning. Semiconductors are another one of the ugly ones. They have broken down through an important level of support here. Got a bit of a Greystone doji, which can be a reversal candle, but it's usually a reversal candle in an uptrend when it looks like that. So no, there's nothing bullish about what's going on here. You can even see that the RSI is doing what it should be doing as this makes new lows, because it looks like it's made a new low. So yeah, not thrilled about the semiconductors. And again, going way back into 2020, find the next level of support, which is around 175. Healthcare. Healthcare coming into important support levels as well. Haven't drawn those in, but yeah, this is, we've got to see this bouncing in this area if you want to see anything out of healthcare. It's still well above the June lows, though. So yeah, you could definitely see how this might capitulate down to the June lows and then reverse. But again, not my favorite space lately at all. Biotech. We were looking at this last weekend. Because we saw this nice head and shoulders pattern here that it had broken down out of, and then through the week we got the Biogen news with their Alzheimer's drug, and that caused this big gap up and move up. But you can see as we got into the resistance, which is the neckline of the head and shoulders and also the 21-day moving average, it's failed there twice now. So biotech looks ready to roll over. Lab D, which is the 3 times the inverse ETF on biotech, looks like an interesting way to play that, and you can see that one has found support at the 50-day moving average. It's put in a nice hammer candle here on Friday with good volume. This could be an interesting play for Monday if biotech is breaking down. And I'm just going to add an alert there. Oh, that was odd. Why didn't that... Oh, okay. Not sure why that doesn't want to add the alert. Okay. let's take a look at some of our defensive sectors. We'll start with REITs. REITs are nasty. Big move down, but had a bit of a revert, or had an inside, a green inside candle on Friday. Interesting price action here. Is this a reversal? It's much too early to say yet, but very, very aggressive traders would buy this above the high of, and which is also the open of Thursday. I'm not that aggressive, and it's really, it's a defensive space anyway. It's not really the kind of space you want to be aggressive in. Yeah, if it was going to reverse, you can see how we've got this huge volume node here, and this has seen a lot of price action before. It is a place we might look for a reversal. Staples. So Staples broke through an important level of support. Had a really ugly candle on Friday. Not as much volume as you might expect, though, on a candle like that. And the RSI, not quite divergence, but not exactly what it should be doing either. You would have expected to see that down lower. But let's see what we've got here, right? You can see how important this level was, going all the way back into late 2020. Where do we find our next major support? Is in around 63. Might find some support somewhere in this area, though. But in a way, this is what we want to see. If we're looking for a bottom of this bear market, we need to see these defensive sectors fall apart as well. We talked about Apple falling apart. Apple is almost a defensive stock, right? We've seen REITs, which are defensive stocks in there. Staples, defensive sector. All kind of falling apart. We look at utilities. We've been talking about how utilities have been falling apart for a while now, right? They've just come in, they've come in and now cut below this major uptrend. From the pullback on the COVID recovery, we've got this major uptrend line, and it cut through that on Friday, and then coming into support in here in around 64 and a quarter. So again, this is the sort of price action we need to see when people are giving up on their defensive stocks. This is sort of the last thing you give up on, right? This is another sign of capitulation, and it's a sign that the bottom is coming, that maybe the bear market is nearing its end. But we may need to see a really nasty flush for that to happen, though. And on that happy note, I think that's all I've got for you. Boy, I hate to leave it off there, but sorry, that's the way it goes. This is an important week. There's a lot in the economic calendar that's important and could be important catalysts, and we've got a lot of technical price action that could be important catalysts, and we've also got some news events that could be catalysts. And let's not forget, the week after this coming week, we have CPI. That is October 13th, I believe. So, yet another, no doubt, another volatile week coming. So just be careful. When we see this, if we see this falling apart, if it looks really nasty and ugly, that's probably capitulation. You don't want to be one of the people capitulating. Good luck. Be safe. Be careful. And try to have yourselves a good week. Just want to thank everybody for watching. If you haven't hit that like button yet, go hit that now. And we will see you for Ticker Talk on Wednesday. And we'll see you again here on the weekend. Have a great, enjoy the rest of your weekend, everybody. Thank you.